We also have, of course, lots to discuss when it comes to the real estate segment and all the trends that are evolving on that front, as we just heard from Kotak as well. Clearly, the market is ripe. We've got Mr. Vasudevan of Vascon Engineers, as well as Dr. Nitesh Kumar of Emami Realty joining us on the show today. Gentlemen, good to have you with us. Nitesh, if I could start off with you and, trying to get a sense really of the demand trends in non-urban areas, both in Tier 2, Tier 3 locations, and what they're looking like right now.
Well, good morning to you all. Well, real estate, as you all know, as a pleasant surprise, has beaten all predictions. We were all thinking it's going to take a long time for it to come back. But in the last 2 quarters, quarter 3 and quarter 4, residential real estate has significantly been a benchmark. And the reason is there's a lot of pent-up demand, which was there. A lot of people realized that living in rented accommodations was not their cup of tea. They had been asked by their landlords to vacate in certain times. The home loan rates have really come down to significantly low levels in the last 2 decades. It's the best time. And with the work from home culture, people have gone to their respective native cities, and they are seeing and witnessing that the affordability index out there in the Tier 2 and Tier 3 cities have risen up. The work-life balance is much better, and they are able to have bigger size apartments or land banks with them to build their houses. So we also plunged, having good sizable land banks in Tier 2, 3 cities, to launch the projects, and we've got good results out of it.
New listings. I'm just going to touch upon that before continuing this discussion, but Hirenba is having its debut today, and it's an agrochem firm, leading producer there of pyrethroids, which are used in pest production. So just a quick look at that listing coming up on your screen as well this morning. It's up 49%, 49-50%, so as anticipated, having a good start there. Okay. Mr. Vasudevan, if I could come to you on, the kind of impact on construction activity that we've seen during the lockdown, and now the rebound as well in activity, particularly in non-metros.
Yeah, see, it was natural because when you had a lull for four months or so when we had no work, and it is not as if the demand wasn't there. So demand was there and the works were all halfway done. So it all picked up. The challenge was actually how do we remobilize the labor which had dispersed off from various sites. That luckily for us, I think, turned out quite faster than what we expected, and things moved on. We are now almost in most of our locations, almost 90% plus the levels which we were pre-COVID last year, like last March before that. So that front, that's been a good move.
Sure. Nitesh, if I could throw in a question here as to what is the demand-supply scenario, because, real estate pricing is also a function of how demand and supply in those specific geographies is actually panning out to be. And at the level of the company, that's Emami Realty, what's the current inventory that you're currently sitting on?
Well, good question. It's always a demand and supply game all the way through. Well, during the pandemic, we've all seen, what has happened to real estate in many industries, so to say. But there was also piling up a lot of pent-up demands. People realized that the physical asset, is much better than holding volatile stocks and gold, which is always subject to market conditions. Today also I was seeing, it was 600% down, 600 points down because of US bonds. So real estate is something that you can see physically, tangibly. You can, if you have a long-term tenure, it's a good investment. And for the self-users also, people have realized from the work from home culture and the online education systems that they need bigger houses they were residing in. They need more space in the house for each member of the family. And, this is how the demand is increasing. But what we have seen is that over the years, consumer preference have changed. They are seeing branded corporates and branded real estate players, being preferred over some small players. There are some obvious reasons, I don't like to discuss in this forum, but the end user market is preferring ready-to-move-in apartments, ready-to-move-in homes. If they are going for under construction properties or newly projects or newly launched projects, they are preferring from branded corporates and all. And we've also seen a lot of NRIs taking interest, in buying houses in the native cities, in the India. So that has also surged a lot of demand in tier 2, 3 cities also, because there's of course an emotional quotient. They were always on the edge. They were fence-sitters of whether to buy a house in the native city in India. But during the pandemic, they've realized that their own country and their own place is always a better option, and their rupee devaluation, a lot of government pragmatic policies have helped them to take a decision as the home loan rates are really down. So demand is increased. You have seen in the last quarter itself, about 23,000 units in the Delhi NCR only has been sold out there. I've been told about 68,000 total units in the one quarter itself has been sold out. In the Pradhan Mantri Awas Yojana, they have sanctioned about 56,000 units in the last quarter itself. So all this is giving a very positive approach, a very positive sentiments in the market. And residential sector is taking the key role in that. As far as Emami is concerned, we currently have an ongoing portfolio about 6 million square feet and about 160 acres of plotted bungalow township. We are planning to launch another 100 acres township in our tier 2 cities in Jhansi. And also we real estate.
Nitesh, we see. Nitesh, there's a bandwidth issue. We seem to have snapped your link. We're just going to get back to you. But Mr. Vasudevan, if I could just understand how the industry dynamics are currently working, would you go with the view that Nitesh currently had, that there is a bigger revival and rebound which is happening in the rural end of the markets, and that trend is here to stay?
I think I will agree with Nitesh in the terms key by tier 2, tier 3 cities are going to bounce back much faster than the tier 1 cities because of the infrastructural facilities in these cities are also catching up pretty fast. And one of the basic needs for the IT working crowd is the basic infrastructure and the connectivity. So, and once that is established, working from any place is not a issue for them. So that being so, these cities are going to really take off. Yes, there are types of houses going to change. Maybe, as Nitesh said, the demand in the house, the pressure in the house for more space has risen. How is it going to affect the commercial market? I think time will tell that because we still feel Kibai, this is a phase where the requirement of commercial space will not really, it is tapered down today, but I don't see it lasting for a long period going ahead. It will catch back within next 2 years or so. So there is realignment of what housing needs are. People are going to go for bigger places. So there's going to be upgradation at all the levels. So newer projects will have its advantages as well because not all the older projects can take care of the present requirement. So there is life change happening across. On the entertainment sector and other sectors which are supporting the real estate, we'll also see a change in terms of how it functions with the online marketing, how all function. These are all challenges which over the next year or so will pan out, and one will see a difference. Is what I feel.
has demand come back or only transactions have gone higher? When I say demand has come back, is it largely because of low interest rates, demand is back, or prices have also started going higher in whichever categories we just discussed?
No, I don't think prices are going up, and I don't feel that prices should go up, because ultimately the demand is at a particular level, and the biggest difference, as you rightly mentioned, is the interest level. So the interest level being at about 7 now, I think it's a huge incentive for people to take a decision and move ahead, because their buying capacities have naturally increased because their EMIs have dropped down. So either they will be able to enter into a buying spree, or they will be able to buy a higher apartment, which was their aspirations today, at the same EMIs as what it was before. So I feel the most important factor is the interest rate, and also a stabilized rate at which products are available today across the country. And also, very importantly, the quality of apartments have changed. Yes, as Nitesh mentioned, there are different stages. People are entering at a later stage. That's also due to the tax structure in terms of GST being free after the completion is obtained. And so either you have people booking at the beginning stage, or people booking after the project completion stage.
Nitesh, a lot of states have given a benefit if you do registration before 31st of March. We just had the management of Kotak Mahindra Bank. They said if you take a home loan before 31st of March, you get special benefits. When things will normalize, which they would eventually, do you think the real estate pent-up demand, which has suddenly come because of affordability and because of the tax concessions, it will start impacting a sensitive space like HFCs?
See, again, it all depends on the overall economy. If interest rates are not under pressure and the interest rates are going to be going down, or at least stabilized at even at 7 or sub 7, then these are various packages. Stamp duty. These ultimately, if you see, it's a difference of 1% or 2%. So it's a packaging marketing which all of us take up and try and push people to buy. But this will continue. We'll have different packages offered at different point of time based on different situations as those point of time. Ultimately, but they are all the need is there. See, just because we are giving 1% stamp duty, it's not as if person is going to pay out 99%. He still has to manage 99%. So the need is there. That's the basic requirement. And need at the affordable level. If the supply is there, then there is no stopping in sales happening.